Hey everyone, welcome to today's video, buying the dip. I'm going to teach you how you can look at buying the dip. Very obvious, so please do stick around. You're going to learn something probably quite good if you are thinking about, I want to buy cryptocurrency, 10k is too much, oh, I'm going to buy it anyways, oh, it's dropped like a stone. I want to show you some basic tips on how you can improve you as an investor. So then, let's go. Let's have fun. This is a Bitcoin chart, obviously. So if you've not yet done so, please do subscribe, press that bell button, and obviously tell all your friends. Now, let's zoom in a little bit. Obvious answers, you can put them in this comment box. Levels, interesting areas. When things go up, you're always going to remember when they do trickle up nicely. It's like anything. Markets only remember the big things. Always remember them, the big drops where support and resistance is therefore formed. Looking at the daily time frame here on Bitcoin, and you're thinking, I want to buy Bitcoin, but I don't know where to buy it. You're going to put your orders in key areas. Now, this doesn't mean it's going to be bulletproof. When you see all the GIFs and the memes of the dip that keeps on dipping, it's all about being strategic with your money. So that's one tip, money management. Don't go all in on a level. Like, for example, now, this level could be a dipping area, could piss off up there. It could, yes, we know that. But it could also just go vroom, 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 back down. And you've already blown your load on one level. Be strategic with your money. Now, daily time frame, levels will take a while to get there. So if you get paid monthly or you got money to burn, wait, just be patient, because I'm going to show you a little tip that is key. So there's going to be a few little tips I'm going to show you on buying the dip. Tip number one, you're probably already late, right? This is obvious. If a market has done this, oh God, work. If a market's done that in 50 days, 42 days, 52%, you're probably waiting for the time to buy in the dip, right? You're probably late. When everyone's rushing to a gold rush, the key element is not to kind of jump in straight away, just wait and see what happens. It's one of those things. So when you think, right, Bitcoin's gone up 50%, quite exciting, I really want to buy into this, don't just buy at the fucking top like most people. Just honestly, just wait. So tip number one, wait for the key levels. Now, one area you can do is put pivot points on your chart. If you're on TradingView, it's easy to use. Go to indicators, put in pivot point standard, or put in pivots, and jump in this one. It's awesome, right? In terms of setting it up, oops, if it will work, come on. Nice bit of dick. Always goes be a dickage. So you go to your pivots, you put traditional and go monthly. That's it. That's all you need to worry about. Obviously, change the colours and make it nice and pretty. But these will map out your key levels and interesting areas. Why? Because over a course of a month, it is plotted. So it gives you areas. Now, when you look at it daily, you got a nice big level there. 8.2. You've also got a nice big level there. 6.8. Will it get there? We don't know. But what I will say is, when you add on this as well, the volume profile, another indicator you could easily use, go to indicators, go to volume profile, and then go to visible range. You can plot this and set this up as well. You can change how it all looks and rows and stuff to make it look pretty. But when you start seeing these little sticky out ledges, essentially, like literally like shelves, it's where volume is. That's where buyers are waiting, where support levels are. It's always key. You've obviously going to have buyers and sellers in ranges. Support is where buyers are waiting. Resistance is where sellers are waiting. So make sure you understand that. So if you're thinking, I'm going to buy the dip, well, you buy a little bit here, right? Knowing well that it could pop up, yeah? And you may not get a big dip. But people sell the dip. They don't buy the dip, they sell the dip. And I genuinely don't understand why. So please don't be that person who sells the dip. Buy it. If you're an investor, just buy it. It's a lot easier, trust me. Even if it keeps getting lower, you keep accumulating the dollar cost averaging. So that is one tip you can use. I'm going to give you another tip now. If you go to the weekly time frame, this is a good one as well. When you look at the uptrends and the downtrend of a chart, right, you can see here other key levels. Look at that dip there. That would be a tasty dip if you were to get that far. But when you start putting like a Fibonacci from the latest uprising, well, what else could you look at? You can look at key levels of a chart. The Fibonacci will always tell you if a market will retrace a said number of value. This is the weekly chart. This may never come off as neatly as you want it to be because it's a weekly. But what I'm going to do is I'm going to go over the daily chart. Why? Because it's going to highlight these levels in a much easier fashion. If I zoom out again, go to a full chart, you're going to start seeing something that looks very, very neat and tidy. What are you seeing here is kind of other levels within the chart, telling you exactly little areas where things will stop and turn around, technically. So this is obviously the full market move, right? You can see the structure clear as day. You got the pivots, right? You got the Fibonacci areas where everything seems to have stopped or slowed down in these key levels, that one there. So when you're thinking, I'm an investor, I'm excited about Bitcoin, I'm bullish long term, hoo-hoo, we're coming down, yes, my opportunity to shine. Right, what you need to then do is think, fuck, how much money have I got? Cool, I can risk that, I can risk this, that and the other, cool. I'm going to buy a little bit here. Cool. And then what you're going to do is you're going to plot out your chart. You're going to plot out little levels of areas where you are going to buy your shit. Because why? Look at this dip here. There's a big gap, volume. If you buy anything lower than that, you may miss it. It may bounce back up. So put a little bit there. You're also going to map out all your other areas of possible zones that you could potentially buy. There's another one here, obviously. Now, a lot of people don't like doing this, but people do ladder in orders as an investor on platforms to figure out, should I buy or should I not? Now, you could have 2 or 3 different ways of doing this. In reality, you could. You could be like that person going, right, actually, I like the idea of this, I'm going to do it, but you need to also think rationally as well. How much can you afford to risk on each one of these if it does carry on? Because we could carry on going down. We could go all the way back down to 3k. We could. We don't know. 5k, 6k, whatever. You don't want to overspend at these tops. You want to start thinking, right, if we go low enough, I'm going to keep increasing how much Bitcoin I get because I am bullish long term. These levels are just telling you areas where there's little pockets of where the buyers are. You want to try and buy in or around or just in front of where these buyers are. So you can see where all these levels are. It's kind of, it's pretty obvious in reality. You don't have to go overzealous on the boxes. Just map out an area where you could probably annotate, you go, right, I'll probably buy at this level, I'll probably buy at this level, I'll probably buy some at this level too. You don't know what's going to happen. But buying a dip is a total reversal of when you're trading. When you're trading, you only want to trade with the trend. You want to go north with it. If it's going up, you want to go up with it. If it's going down, you want to go down with it as well if you're going short. If you're buying the dip, you want to find those little support areas where things are going to go boom. Because, I'm going to say this now, on every single breakout, you can see on the chart, it's kind of obvious. When you got a breakout, look at this example here, this region. Breakout, resistance, we test support, that is the dip. Breakout, retest the previous support, this is where this wick is, boom, this is an area of support. Every single time. Market structure is key and it should never be underestimated. So that is how, in my opinion, the best and the safest way as an investor to buy the dip. Yes, there's some technical jargon in there and please do check out the link below if you do want to get some more training. It's relatively simple, it's cheap, it's awesome as well. But what I will say is the main element of this is money management. If you've got $1,000 to burn or £1,000, €1,000, whatever, and you're putting all your eggs in one basket at the top, be mindful because it could go wrong. These other opportunities are always going to present themselves in the market no matter what direction this will go. This could go really high and come back right back down and go really high again. We don't know. But we could also go all the way back down to 8k and you've already blown your load on the 9.6 dip. What's the point? So there you go. That's today's video done. Hope you enjoyed. Let me know in the comments if you like this little bit of a lesson. Feel free to subscribe, hit that like button, and obviously press the bell. And I'll see you again tomorrow. Most likely we'll talk about something random, but I think buying the dip was a great little lesson for most people, and hope you learn from that.